Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Market5. I'm your co-host, Joel Alcana, along with Brianna Valesky, and we have Ian Weiner on the line. He is Director of Equity Trading for Wedbush Securities. Ian, how you doing this morning?
I'm doing well, thank you.
Thanks for coming on the show. Just real quickly, just get a little education for our listeners here. Could you discuss the difference between, sell side, firms and buy side firms?
Sure. Sell side firms are your typical brokers and banks, and our job is to service clients via research and trading and provide capital for them as well. The buy side is the client side. So a buy side would typically be, a large mutual fund or any large hedge fund or institution. And so our job primarily is to make them money, and we offer them banking services and research primarily.
Okay, and on your trading floor, you also have sales traders, and then you have position traders. Discuss the differences between those two positions.
Well, historically, the difference would be that the position trader controls the actual capital. So if a broker is going to provide liquidity for a client or somebody on the buy side, typically the position trader would do that, and the position traders are typically sorted via sector. So you'll have one who trades biotech, one who trades technology, one who trades the banks, and then the sales trader is actually the point of contact that talks to the client, to the buy side themselves. So typically the flow chart would look like a trader sitting on a buy side desk like Fidelity would call up the sales trader and say, I'm looking to sell 100,000 shares of Microsoft. The sales trader would then talk to the position trader that trades Microsoft, and they would coordinate how they would execute that order for Fidelity. In today's world, those jobs have been blended together pretty much, and you have many position traders talking directly to the clients, and so it's not quite as differentiated as it was maybe even 5-6 years ago.
And your traders are seeing just tremendous order flow, and you have some of them that just concentrate on the order flow and others that pay attention to the charts? How do they do it?
Now, the responsibility of each position trader is to know both. A good position trader will know the stories very well, so they're a content generator. Because a lot of times the buy side, the clients won't know why a stock is moving, or they won't understand exactly, what news means for a stock. The best position traders will quickly understand what they mean and know why things are happening in the marketplace. And therefore that information they provide to the buy side is a valuable resource and something that the client typically will pay for.
Okay, there's a lot of earnings out, a lot of macro events that are going on, and keeping your traders on their toes. Let's just talk about the earnings in Walmart today. We've had just an unbelievable pre-market range. Do you have your traders out there in the pre-market observing, and then making trades when the actual numbers come out? But boy, a historical move in Walmart today. What's your take?
Well, typically what we like to do is process the information before we start trading pre-market. As I'm sure a lot of your viewers and listeners know, pre-open trading and post-close trading is very, very dicey because a lot of times there's just not the same liquidity and there's not any price discovery based on the news. So we typically aren't going very aggressively in the pre-open. As far as the fundamentals themselves, I think there's two interesting points, right? Obviously it was a pretty good number. The guidance was a little weak, and you have them blaming the dollar, which seems to be a recurrent theme amongst companies, which I think is something people need to keep an eye on. And at the same time, they've committed to raising wages for their employees. So that's clearly a victory for labor, and clearly going to be a headwind for Walmart. And they've said it's going to cost them about 20 cents in earnings over this year and then and next year. So, that to me, if other companies start doing that because they feel pressure now to do that, it's going to be a headwind and could hurt these companies. And if the companies decide to raise prices on goods to offset some of that, it'll ultimately hurt the U.S. consumer as well.
And do you find that you have funds or institutions ahead of earnings, like trying to pair positions or add to positions, or are they pretty much set and then use the earnings analysis to make their next move?
It's both. It really depends on the nature and investment style of each fund. Some hedge funds, especially the ones on the smaller side, will typically trade in and out of positions much more quickly, trying to make a quick trade, versus some of the longer-term mutual funds. Will trade around a core position based on earnings, but they'll typically wait and see whether their thesis has been confirmed or changed to make a decision on what they're going to do with their position.
Okay, we also have some macro headlines coming out of Greece, and big moves in the oil markets. Do you just try and keep those in the back of your mind, or do they affect some of the decisions that your sales and position traders are making?
They definitely affect our decisions. The last 5 years, the macro has primarily been the driver of the markets. There has not been a whole lot of single stock alpha. And the reason is because the Federal Reserve has been supporting the market. You have global liquidity being pumped into the system everywhere. You have rates going negative in some countries, and everybody seems to be trying to weaken their currency to improve their exports. So when stuff comes out on Greece, I don't know what truly is going to happen, or even if you told me what the news is going to be, whether they stay in or they don't stay in, the euro. That I don't know what the market does, but it is interesting that you have the ECB saying that there's probably room for compromise, and then the Germans saying this isn't going to work. So that's I think going to make people nervous as with each passing moment to decide, because I think the initial reaction will be if they don't stay in the euro, or they can't get the money, that it is going to spread a little bit, and I think you'll start hearing more and more about Spain being the next country that looks to exit potentially.
Well, being the head of the trading desk for Wedbush Securities, I'm sure that the traders, consult with you, get ideas from you. So, what are you telling your trader in Priceline today? Holy smokes! This thing is trading up almost $100. Unbelievable move in it. What words of advice do you have for your Priceline trader?
Don't be short. That's the primary advice, even up here. Right? Because here's a stock that's been under all kinds of pressure. There's been all kinds of nervousness around Europe, and yet here you have, European bookings, probably due to the weak dollar, strong dollar, has increased dramatically. The company seems to be getting its footing back. You had recent consolidation in the space with Expedia and Orbitz, and so now you're looking at two big players. The news just got incrementally better. There's not that many great stories out there. And so, I think if anything, if the stock dips off these highs, during the day, you probably want to be adding to positions or initiating positions rather than exiting.
Wow, bold call there. Another stock that's moving here, your Solar City trader. Is he going to be deluged with sell orders here? Found some nice resistance over the last couple days. Earnings disappoints here. Any advice for your Solar City trader?
Yeah, I think with Solar City and even Sun Edison today was weaker than expected. These are two very crowded hedge fund long positions, and they so you're going to see an outsized move to the downside, I think. So what my advice is to the traders is, let it flush, so to speak, in the first few hours. Let people kind of say, all right, you know what, I'm getting out. I was there for the earnings and it didn't work. And then as it starts to settle in, I think you have a long trade set up in both to buy the dip in these, because ultimately they're still pretty good stories, the two names. It's just a question of what's the catalyst, and especially if oil's under pressure, it's just one more thing people keep in the back of their minds for not buying solar.
And pharmaceutical stocks, they must be extremely difficult to play, with the drug trial results, FDA approvals, and whatnot. You have one here, PCYC here, kind of a thinly traded $170 stock's been consolidating here for quite some time. Is this something that you have any opinion or advice for your trader on?
Yeah, I think this is a long. I think I don't think you have to get crazy here at these prices, but this is one. If it dips back into the 160 range, I think you want to be buying it. It's one of the better biotech stories, and I think the general consensus in biotech in general, and again, I don't know if this is right or wrong, but the money, the big institutions seem to think we're on the cusp of something really big, as far as all these drugs kind of really starting to make a difference, and all the R&D from the last few years is starting to finally, work. And you've got a lot of mergers and acquisitions in the space. So, this is a name that has a really good story. It may come off a little bit today. I know there were some downgrades, some upgrades, but I think this is one that ultimately goes higher.
How much do your traders pay attention to the upgrades and downgrades? Obviously your firm is pretty influential, but like the Goldman Sachs, the Morgan Stanleys, is it something they just process in their overall, thinking on the stock, or is there, some moves, or when the analysts gang up one way or another, they, try not to, get in the way?
Well, it really all depends. I mean, every situation's a little bit different. To me, the most interesting calls that come out of analysts are when they've been very bullish on a stock and then they downgrade it, or they've been very bearish on a stock and then they upgrade it. Because typically, when you get an inflection in thought, that's something to keep an eye on, because something's obviously changed with as far as the sell side analyst views it. And so if I'm on the buy side, which I was for about 6 years, you want to call the analyst and ask them, okay, so what's changed? And you want to make sure that you check off their opinions versus sort of how you're thinking about the stock, to make sure that you still feel convicted in your thesis.
Another pharma stock here, AR Ariad Pharmaceuticals here. This thing's bunching up here near the 750 level. Another pharma stock. What's your take on that?
Well, again, it's the direction of biotech continues to be up. So, when I typically tell people in names like Aria and some of these other kind of smaller priced biotechs is, it's very hard with the retail kind of coming back into the market to have any sort of real view on what it's worth, because you just don't know. I mean, people will make up sort of what their estimates are going to be in 2021, and they're going to kind of price that into the market somehow. So typically I try to tell people go with the direction. So even when it's up, you want to go with it. And I'd rather be long than short. And the same way on the downside. When there's a biotech that breaks, they're typically, the bottom is much lower than what rational pricing might tell you.
Ian, I'd love to ask you about some of these Momo stocks. Do you trade these? I mean, thoughts on Apple, Alibaba, Facebook, Twitter, any of those strike your fancy?
Well, I would say that of those names, I think that the most interesting one on the long side, at least, is Facebook. The reason for that is you just have a company and that seems to be the executing everywhere. The acquisitions that come into question seem to be working out, and the stock's actually consolidated quite a bit here. It's had a tough time with the high 70s, but I think that this is one when people start to look out towards the end of this year and the beginning of next year, and how mobile is clearly turned for them. That's the one you want to own. Now the rest of the names, we as a firm like Alibaba a lot. The issue you run into with Alibaba, in my opinion, is it's a name that everybody owns. It's a name that has some degree of uncertainty given it's from China. And look, they just had a not so hot quarter. So to get the stock up from here, I think people are going to need to see the next earnings print, and they're going to need to see that this company has figured out sort of how to manage Wall Street better. Apple, it's all right. It's the greatest story. Just ask everybody. You hear 6 segments a day on the stock on CNBC. So, it's hard to come up with a bearish thesis. At 128, 129, with the size of this market cap, I can't tell people just keep buying it here. I just kind of leave Apple alone, and it does its own thing. Twitter, I think Twitter's probably a short. I mean, I don't think that, up here at $48, I get that things got a little bit better last quarter, but there's still a fundamental kind of secular challenge for this company in terms of monetization. And until they demonstrate that they're able to monetize sort of their scale better, I think it's going to be a tough time for the stock to get much higher than here. And then the other bull case, which everybody seemed to think was going to be a great idea, which was getting rid of the CEO, that doesn't seem like that's going to happen either, which, I guess you can decide if that's a good or a bad thing. But, up here at 48 to 50, I think that this is a good short. And I think it's a good short if you're going to pair it up against the Facebook long.
Do many of your sales or position traders, do they do many pairs, or are they just trying to concentrate on the individual equities?
No, they like to do pairs because, there are a lot of funds out there that trade sort of, neutral. So, there are some funds that have a mandate that if you're going to buy a stock, you've got to short against it. You can't just be sort of naked long. So there are a lot of funds that like to see pair trades, and like to put them on to try to generate alpha within the pair. And what that also does is it takes a little bit of the market risk out. So if you're just running long and the market goes down, you're going to lose money. If you have a long and a short and you're paired off, then if the market goes down or the market goes up, you have a decent shot of making money if you're a good stock picker. So people are always looking for sort of, what's your best long and what's your best short, and you put those on versus each other.
Oh, that's interesting. Just before we let you go, we're on the line with Ian Weiner. He's Director of Trading for Wedbush Securities. We talk a lot about, with the technical analysis, we talk about, whole numbers and levels. And a lot of times we're shorter-term traders. We look at chart patterns and whatnot, and you can see the institutional, traders at these levels. Is that just kind of like a myth and a self-fulfilling prophecy, or do they just kind of like to, stick around, put the big orders around the whole numbers?
Well, I don't view too much into the whole numbers. I mean, I think technical analysis is important because everybody seems to think it's important. So, people react to whole numbers. People react to different things. I don't think it actually goes into the fundamental thinking of stocks. I think it goes into, if I love a company and the technicals look better, and by that I mean, it's breaking out or it's at major support, those are levels where I may add to that position. But it's rare that somebody, an institution that we deal with, will buy or sell a stock based on sort of technicals alone.
Okay. All right. Final market thoughts here.
I think you got to be careful. You got to know what you own here. You better be sure that if you like a stock, you better understand where the earnings estimates are going and the direction should be up, and that it's a good story. Otherwise, I think you got to be very careful because it seems to me like, there's the bullishness is extreme. You can see that in any of the sentiment polls. And, I think that we're due for a pullback here just based on the fact that we've rallied over 100 S&P points, in a row.
Okay. All right. We've been on the line with Ian Weiner. He's Director of Trading at Wedbush Securities, giving us a well-rounded outlook on the market. Thanks a lot, and we'll talk to you again soon.
Thanks, Ian.
All right. Thank you.
Okay, are we bringing in Jeremy live here? Do you want to take a break?
Let's take a quick break, real quick. We'll be right back.
Okay, we'll be right back with the youngster, Jeremy Newman of RealLifeTrading.com.